as I was just saying to our followers, Matthew Griffin is our invite today, and it's a great pleasure to welcome you here in ApideTV show. Thank you, Matthew, to be with us. Just to remember that you are the CEO of the 311 Institute. Thank you so much. We're going to discuss together about prediction, mutation, the bank transformation in the future. And maybe the first question we would like to ask you is about this future. Is bank will be only digital fields?
So when we actually think about banks being digital, so neobanks, for example, the simple answer basically would be yes, but the actual real answer is no. And then another answer is, actually it could be, but it actually could be lots of other things as well. So let's dig into it. Now, when we think of banks, basically obviously we've got physical banks, we have digital banks. However, we also have virtual reality banks as well. Now, a virtual reality bank is very, very different to just a digital bank. So on the one hand, when we think about the terminologies that we actually use, we often think of digital as being anything that's ones and zeros, binary, that kind of stuff, anything behind a screen. But on the one hand, we have these kind of three different worlds that banks can actually live in now. So that's obviously physical, digital, and virtual. However, if we actually really take a task basically to digital itself in terms of digital banks, we're already seeing the post-digital age. Okay, so I'll explain. Now, when we actually have a look at digital, really what we're talking about are banks basically that are cloud-based, using microservices, APIs, digital interfaces, good old digital stuff. However, in the past, when we started automating a bank, we would then start using digital robotic process automation technologies. Still fairly traditional, still fairly digital. However, with artificial intelligence, as we increasingly embed smart and sophisticated artificial intelligence that is both autonomous and has its own agency, so this is where AI takes information in, it analyzes that information, but we have given it the agency and the autonomous power to then make a decision or do something, perform an action. What we're now really doing as banks is we're actually building an artificial intelligence hive mind based into our banks. So these hive minds have been trained on huge volumes of human language, these large language models and so on and so forth. So the question I often ask banks is, are you going through a digital transformation? And they also put their hands up. However, as artificial intelligence becomes more embedded within the banks, as it becomes more autonomous, smarter, all these things, are they actually going through an intelligence transformation in the bank? And the two are very different. So increasingly, we are moving into the post-digital age and the intelligence transformation age.
And what will be the daily purpose of the Bank of Tomorrow about AI you were talking about? Because it's going so quickly, this evolution. Also about automation you were talking about and the blockchain.
So, when we have a look at the bank's ability to embrace artificial intelligence, we have a few different AIs. You've got machine learning. So the vast majority of banks will actually use machine learning. And the vast majority of regulators don't really like banks using any form of artificial intelligence, especially those that are actually in the cloud, because of data and privacy and compliance and regulatory sort of restrictions. So from a bank's perspective, while we can see a whole variety of new AIs basically emerging, so generative artificial intelligence is one. We first started talking about that about 10 years ago. We've got open-ended artificial intelligences coming through. We have AIs that are evolving themselves, that are replicating themselves, that are optimizing themselves. When we really talk about banks embracing artificial intelligence, they're nowhere near the actual bleeding edge of AI. They're still in that sort of traditional machine learning. They might play around with deep learning if they are trying to do investments or quantitative trading. But for the vast majority of banks, artificial intelligence is still very much the kind of AIs that we were talking about in 2018, 2020, that kind of stuff. Although they do try to actually bring some of these newer AIs in, but regulators don't like that. Well, And another reason why regulators don't like artificial intelligence is because it's increasingly difficult to explain how the AI within your bank made this decision. So explainable AI is increasingly problematic because in some cases we've seen AIs making up their own languages and encrypting it.
What is the future of open banking?
So realistically, there's always this fight basically between proprietary technology and proprietary technology stacks and open source. Now, if you go and have a conversation with any large bank, any large technology company, say, what do you think about open source? Yeah, they will say it's fantastic. We fully support open source. It's superb. But from the banks, yeah, exactly. That's it. So they give you all the right marketing messages. It's yes, we embrace it. We love the community. We contribute code, whatever they get up to. When we have a look at things like open banking, though, do banks like HSBC and Barclays and Lloyds and Standard Chartered and so on and so forth really appreciate fintechs being able to draw down their consumers and their customers' account information so they can put it into a PFM system that the fintech can then start innovating on top of and monetizing? So when we talk about the future of open banking, on the one hand, the regulators around the world push and promote open banking because it's a really good way to foster fintech innovation and GDP growth and jobs and so on and so forth. From a bank's perspective, they embrace it kind of because it's there. It's a little bit like it's like a cousin that you don't really like, but you have to keep inviting over to your house. But when we actually have a look at the future of beyond open banking, in Australia, we actually see the development of what we call open data regulations. Now, when we have a look at open data regulations, this is really where the Australian government, and there are other governments looking at this now, the Australian government is trying to apply the same principles that we see with open banking, but to every other industry, like your utility industry or whatever it happens to be. So from a bank's perspective, if we look at open data, now it's the bank's opportunity to take data from other companies, other industries, aggregate it together, innovate on top of it, disintermediate the water and utility companies because you could be paying your bank and then they aggregate payments and then they pay the utilities for you. So now as that starts getting a little bit more interesting for the banks.
You were talking about Australia, about this open data. Is a key phenomenon also that we are talking in Europe? And what about Africa? In how many years gonna be to see this phenomenon?
So when we have a look at open banking, obviously open banking is proliferated around the world, to a good degree, let's face it. It's not everywhere, but it's probably 70 to 80% around the world. When we have a look at open data, though, realistically, continents like Africa, even Europe, it's not even really being talked about. They're 5 to 10 years away from that kind of thing. And it's, on the one hand, from a consumer perspective, it's a bit of a shame. I think it's a little bit blinkered. But in addition to that, with a lot of the countries I talked to, they just didn't know that open data was a thing. So it's also about education.
So could you tell us maybe the evolution that we can see about new services and new products coming next?
Absolutely. So if you talk to a traditional bank, if you talk to a fintech, if you talk to a decentralized finance startup, then they will always talk about all these brand new products that they're bringing to market. Now, I can be a little bit cynical here, but if we have a look at new products, and in the US, basically you can now take out a Bitcoin mortgage. So you didn't used to be able to do that for regulatory reasons and everything else, but you can now do that. We're now talking, as we see humans living longer, some banks are now talking about lifetime mortgages as opposed to a 25 to 35 year mortgage. But the fact of the matter is that the vast majority of banks, really, when they talk about bringing out a new product, what they're saying is, we have a new product that allows you to borrow more from us or spend more faster from us. So it's typically new debit and credit cards. Some of the new products we see from Visa, like account-to-account transfers, which replace direct debits, they're designed to be more convenient, but they're not particularly innovative. They are helping create a more frictionless customer experience, but in terms of products that really matter, it's a nice tick box. But when we really have a look at banks from a consumer perspective, every bank that I work with around the world says, without fail, we put customers first. And I always challenge them on this. They say we've got these nice UIs and we're digital and you can bank on your mobile or whatever it happens to be. But let's face it, the vast majority of banks are actually making people poorer. And the reason they're making people poorer is because as consumers and businesses, we put our money into banks. And in Medici times, it used to be the case that I gave the bank my money to keep it safe. They put your cash and your gold into a literal safe. That was the purpose of the bank. Then the Medicis basically started thinking, well, because we're keeping your money, maybe we can loan it out. Now, from a bank perspective, if we look at, say, for example, my bank is HSBC. I've banked with them for 30 years. They've done very well out of me. I put my money into my bank accounts with HSBC. They pay me 0 interest. Now, global inflation is running at 6 to 8%. In Ghana, it was 64%. Every year, by banking with HSBC and others, they're not alone, as a customer, I'm getting poorer. So when banks actually say they're putting customers first, they're really talking about convenience, the frictionless customer experience, digitization, fancy UIs. So what I'd really like to see is a bank that actually does put customers first and actually helps customer be richer at the end of the year rather than poorer. So some of the services that we can see with this are things like robo-advice. So we've got RBS that's rolling out robo-advisors. We've seen sort of 60% returns with robo-advisors, but there is risk, obviously. But in addition to that, why don't customers actually have a say in how the bank is run and governed? One of my banks, who shall remain nameless, invested money in terrorist financing organizations that they didn't know about. So as a customer, some of the products I would like to see banks producing are transparency related. So we've got your money, and this is where we're investing in it, etc. So impact investing, ESG investing, all these different kinds of things. And honestly, I think a lot of banks are not very innovative when it really comes to trying to change up that customer experience that they are so keen to actually proselytize about.
One point you were talking about is this ESG transparency, and this is something asking for the customer. They want to know, they want to have a more inclusive bank, they want to have also more sustainable bank ecosystem. So what will be the future of ESG for the bank of tomorrow?
Yeah, so you've got, from an ESG perspective, and from a bank perspective, you've kind of got 2 channels. On the one hand, basically, there are the ESG investments that you make in companies that move the dial on ESG. So this is investment banks and global asset managers that are actively investing in the renewable energy transition, those sorts of things. If you have a look, for example, at First Abu Dhabi Bank in Abu Dhabi, they are planting 10 million new mangrove trees because on one hand it protects the coastline, it helps basically suck carbon dioxide out of the air, and it helps ESG, and because they want to. But then the other flip side of the coin basically is bank operations. So depending on the country that you're actually in, especially in Europe are taking ESG certification and reporting incredibly seriously with things like net zero, but also zero impact, zero harm, zero waste. We've got the CBAM regulations, which actually affect where you can buy your cloud compute from. We see new regulations basically around the cost of carbon dioxide. So in Europe, if a bank is polluting with CO2, then they will typically be charged $80 per ton. So from an operations perspective, on the one hand, we're seeing banks embracing many more green style technologies. So that's renewable energy, especially for their data centers. AI, basically, we're seeing a 3-fold increase in the amount of energy that artificial intelligence actually needs. So as banks embrace more artificial intelligence products within their core, inevitably they're going to find their carbon emissions increase. So We have programs to try to reduce carbon emissions associated with AI by 1,000-fold out of Oxford. But similarly, when we really sort of think about the actual impact that banks have, there are a huge number of ways basically that they can actually reduce their scope 1, scope 2, scope 3 emissions. But then sort of bringing it back to the customer, we then kind of have to really say, while European regulators are pressuring banks to be greener and more sustainable, but then they should also be regenerative, because if you're a sustainable business and you simply stop polluting, you still end up with what Greta Thunberg said as a house that is burnt out, as opposed to getting better. But when we actually have a look at sustainability within banks, I think it should be regenerative. It needs to be scope 1, scope 2, scope 3. But again, the vast majority of banks don't really include their own customers in those ESG conversations again.
And of course, the bank of the future tomorrow has to be more, needs to improve all the action for financial inclusion. Yeah. This is a key point. How to do it, how to improve actions, and what will be this financial inclusion future.
So the single thing that moved the dial on financial inclusion the most and the fastest was the smartphone. So the smartphone, simply the smartphone and with mobile banking, brought over 1 billion people into, shall we say, the financial services community. So while banks can sort of, teach people about digital banking, etc., realistically, if you want financial inclusion, then people need to be connected. So they need to have strong, reliable internet connectivity. In Sub-Sahara, 66% of people don't have reliable internet whatsoever. We heard this morning that only really 30% of people within Africa actually have what we would consider a good, reliable internet access. So if you want to move the dial on financial inclusion, then yes, the banks play a part by being able to offer mobile financial services. But ultimately, the pressure has to come back to governments to actually make sure that the broadband, the low Earth orbit space satellite connectivity solutions are there. So at a very fundamental level, people just have connectivity. Because if they have connectivity, then we can start the rest of the conversation.
And one other challenge is that the bank will have to deal with is also, you were talking about regulation, it's also about, instead of safety, security. And we see about cyber criminality that it's huge challenge. And the AI, we are talking also about quantum.
So when we have a look at security, so I'll use a couple of examples, So again, this morning, one of the things I talked about was businesses in Nigeria, quarter on quarter, not even year on year, are seeing a 276% increase in the amount of cyber attacks and scams that they're now being targeted by. Now, that applies basically to the banking system as well. But to use JP Morgan as a little bit of an example, on the one hand, I think that the cyber industry has broken itself. So I run 3 national security programs. So let's unpack it. When you have a look at JP Morgan, they have 45 billion with a B, so high that people had to clarify it wasn't million that they were talking about. They have 45 billion attacks a day. They have 65,000 people defending the bank, and they spend $12 billion a year. Year on year, the number of cyber attacks that are being targeted at JP Morgan, because we've seen the data, is doubling. So while banks can use technology like artificial intelligence and semi-autonomous cyber defense as a way to start managing some of these attacks, the fact of the matter is, a month ago we saw the first fully autonomous cyber weapons emerge actually in the labs that there were GPT-4 agents, and they managed to chain together zero-day exploits. And they hacked through some of the most sophisticated banking systems in 2 minutes. So when we actually have a look at the cyber challenge that banks actually face, they've seen nothing yet. And increasingly, they need to be switching at least 75% of their cyber operations to automatic and autonomous. When we have a look at artificial intelligence, so we talked earlier about building a hive mind within banks. I have 8-year-olds that have hacked artificial intelligences because the new AIs that we're putting into banks actually can be hacked using human psychology that you can't defend against using traditional malware or ransomware tools, etc. But in addition to that, some criminal threat actors, if I know that as a bank you've trained your artificial intelligence on these data sets, or that you will train your AIs on these data sets, if I can poison those data sets, I can put backdoors into every single one of your bank systems. And or I can manipulate the behavior at a very granular level of your AI. So I can get your AIs to make the wrong decision for you, but the right decision for me. Now you scale that up. And then when we have a look at quantum, I was in Lloyd's Banking Group in 2017. We've seen the quantum threat. It's called Q-Day, the point in time where quantum computers are powerful and accurate enough to crack 70+% of the world's encryption. I was in LBG in 2017. We've seen this problem coming at us. Now, we estimate, for a variety of reasons, that the first quantum computers that are capable of cracking encryption at scale will be about 2028. When we have a look at some new AI-optimized quantum algorithms, we can actually bring that down to about 2027. So any bank that has not already started moving away from its traditional encryption systems, like say 256 AES, which we can crack in 8 minutes, and which also underpins most cryptocurrency hot wallets. That's a fun one. We think criminals go straight after those. Unless you have already started to migrate to lattice encryption or post-quantum encryption, then you could argue you're starting to get a little bit too late. However, the saving grace for banks on this one is, while companies like Alibaba, Tencent, Google, IBM, and so on and so forth will have a powerful quantum computer that can crack even 4096-bit encryption in about 12 hours, criminals will struggle to get access to those. However, from a bank's perspective, one of the major threats that we see from quantum is state-sponsored actors. So, for example, cyber groups basically that are held at an arm's length by the Russian government, North Korea, maybe Iran, maybe China. What happens if those countries give state-sponsored actors access to commercial quantum computing platforms and then just say, I don't want to know who you're going to attack with that quantum computing platform, but have fun with it. So I actually think that when we have a look at who will be using quantum computers to actually come after banks, it's not going to be the serious organised crime groups or the hacktivists. It's going to be the state-sponsored criminals and the APT groups.
Thank you so much, Matthew Griffin. It was really a pleasure to have you here, and we understood that we have to invest in all this field to be, let's try to tell, ready for this future. This is not science fiction. It's really today. It's actual, a purpose. Thank you so much, Matthew. It was really a pleasure to have you here in Marrakech. Merci beaucoup à vous de nous avoir suivis. Je vous invite bien sûr à rester connectés pour suivre les actualités, les prochains débats. Et nous poursuivrons en ce début d'après-midi ici à Marrakech sur la cybersécurité à l'heure de l'intelligence artificielle. Merci de nous avoir suivis. Restez connectés. À tout à l'heure.